Every investor's dream is to buy unlimited rental properties. So I'm going to show you how to do that today. My name is Scott Dillingham, by the way. I'm the owner of the Canadian Real Estate Network and LendCity Mortgages. And combined, we're here to help you along your investing journey. So a lot of clients, when they're looking to start their rental portfolio, they will just go to a bank or a specific lender and just keep buying until they get maxed out and they're stuck, right? And they start searching around and they'll discover, no, you have 4 or 5 properties, you're at your cap. That's what they'll hear, you're at your cap, and or your debt ratios are too high and you can't move forward, you're stuck. But what we discover is there's a specific order that you need to apply at specific lenders. And if you mess up that order, you're throwing away potential properties that you could buy. On top of that, you're getting maxed out and hitting caps for your debt ratios that don't need to be there. And I'll give you an example. Some lenders will only finance up to 4 rental properties, or 4 is their total cap, sorry. So whether you have the mortgages or properties with them or someone else, 4 is their cap, okay? Then there's some that'll do 5, and some will do 5 anywhere. So you could have, say you had 3 at a different lender, you could get 2 of them, so you're at your 5. So those types of lenders are very restrictive. So you want to use those restrictive lenders first. Also, they're only going to use half of your rent. So let's say you bought a single family property and it rents for $2,000 a month. Those lenders in the very beginning, those that'll use the 4 or 5 properties, they're only going to use half of that rent. So they'll use $1,000 to help you to qualify. So that's why some people hit these debt ratio limits, because the banks or lenders that they're applying with are not using the full income. So what we try to do is we see where the client is, and then we'll partner them up strategically with lenders. So we'll use a lot of those lenders that have those 4 and 5 property caps first. And then we've got there's one major bank who will do up to 10 properties. Then there's a credit union who will do up to 12, and actually another bank who will do up to 10. And we try to place you where you are along your investing journey based on the amount of properties that you have. But then from there, we look at the rental income. So most banks, like I said, use half of the rent, but then we can shift to some, and these are all comparable interest rates, by the way, but we can shift to some that'll use 80% of the rental income, or even some that'll use a cash flow analysis where we're actually using 100% of the rental income to help you to qualify. So by working with us, we create an investor's roadmap for you, which strategically shows you what lenders to go to next. You'll be able to get quoted the rates and the amount that you qualify for. And then you go and buy the house. And once you get that house and you get it rented, we then redo it for you. And we determine where's best next. And this is all done with one credit check. So it's not like you're going to all these lenders yourself with all these credit checks. Because if you do that, you risk declining yourself. If you have too many credit checks and your score lowers, you're declined. So with our process and our flow, we help investors grow exponentially. Now what happens, let's say that your debt ratios are too high and none of the major lenders want to move forward with you. You're at your cap there. Most people will shake their broker's hand and walk out of the office, and that's it. They have no other options, except for maybe private lending. But we don't like to go there unless we had to. We'll go with our commercial department, which is really unique. Not many offices that provide mortgages have a commercial department right in them. So the commercial department, they review applications differently. They'll still approve you on even a single family house, so you don't have to buy an apartment building or a mall to use a commercial mortgage. You can still buy a single family house. But what changes is the policy. So instead of running your debt to income ratio and determining the max you qualify for, they're looking at it based on the cash flow of the property. So if the property has cash flow using their metrics, right, they are going to use the stress test and they're going to factor in vacancy and things like that. But using their method, if the cash flow is enough to qualify you, you can keep buying and buying and buying. And on the commercial end, there really is no limits. It fully is unlimited. And you can just keep going and going and going. So I realize your lender that you're working with may not have all these tools and capabilities at their disposal. A lot of lenders primarily focus on owner-occupied properties. Our focus at Lend City is real estate investors. So this is our niche, this is what we do. So if you're looking for an alternative and you want to buy more properties, give us a call.